How do you buy your first rental property with a DSCR loan? Hey guys, my name's Andrew Augustiniak here from the Neighborhood Loans Augustiniak Lending Team. And today we're gonna get a little crazy. We talked about non-QM loans in a previous video, but we're gonna talk specifically about DSCR loans. The term DSCR and DSCR loans have been around for as long as I've been in the industry, since 2012. Now, the popularity has only actually come into play here really, in the last 6 years. When I say popularity, I've been doing them since 2012, but now you have them as a trigger term because obviously social media. But a DSCR loan is a way to buy an investment property, doing it in a non-traditional way, less evasive as far as qualifying, income qualifying, tax returns, all that fun. It throws it all out. It's actually easier, as long as you have the down payment, it's actually easier to qualify for a DSCR loan than pretty much almost every regular loan. Why is that? You like, what? Like, now you got my attention. Like, how do I do this? Well, a DSCR loan, again, it's only if you're buying an investment property, has one qualifying factor for the actual qualification. Assets are different to verify your down payment and things like that. But for a DSCR loan, it goes off the market rent of the property or the lease. If that's already a rental property, we'll actually take like 12 months of rental income to show what the actual rent is. And the reason that I say that is because let's say the market rent's $2,500, but it's been renting out for $2,900 for the past 12 months. We'll take the $2,900 as long as we can show that that's actually what it's been renting out for a consistent basis. Sometimes market rent can be tough because you have an appraiser doing a evaluation on it, but sometimes that's not a perfect system because, like I said, if a property is valued at $2,500 a month, but it actually rents out for $2,900, let's give you that $2,900. But all it does is take the market rent or rent and make sure that it's within a certain ratio of your mortgage payment. Back in the past, it used to always be a 1-to-1 ratio. Now, because things have gotten more expensive, investors have gotten, when I say investors, I mean the outlets that we send these loans to that are servicing them, they've gotten more lenient on. We have outlets that as long as the market rent is 75 or even 50% of what the actual mortgage payment is, it doesn't have to cover it 1-to-1, that we'll lend on it fine. That's crazy. That's all. All it is, it needs to be within a certain percentage of what the actual mortgage payment is to qualify for that loan. So minimum down payment on these loans can be as little as 15%, although I recommend people stick to 20. Your terms are going to get a little higher if you start putting the minimum down. Your costs maybe go up, but investor DSCR loans, as long as you have the assets to put down for the property, are actually a pretty simple and easy loan to get because it just goes off the rent or market rent of the property. If that triggers some emotion, you shoot me a DM. All my information is on the channel. Like and subscribe this video. We're just trying to grow this little fun channel to provide more value and clarity for all the different types of clients out there. My name's Andrew Augustiniak, and I will catch you on the next video.